So, will whole life insurance policies that can be borrowed against potentially be negatively impacted or wiped out in this upcoming financial reset?
How many words do you want me to use? One?
You can use
Yes. Yes. I know a lot of people do whole life policies because they kind of view it as a way to save,
one.
right? It's not the most cost effective way to do it.
Right?
Because
Because the
really
insurance fees are high.
very
But
high.
but um, you do get the death benefit. A lot of people do it for estate planning because they get the death benefit, and they get and you don't get any downside risk to the market, right? You can never lose principal, but you're capped on the upside, right? So you might only be able to get 15% on your investment, but if the market does 20 or 30, the insurance company keeps the rest. So that's why people do that, in case you don't know.
Right. But the answer in a nutshell is yes. And keep in mind too that people think that all things are, oh well, they said it's guaranteed. Well, if you read the fine print, it says based on the claims paying ability of the insurance company.
Yeah. Well, and even if it is guaranteed, let's say they do everything that they said they're going to do. If it gets to a reset, it's hyperinflation first.
Right.
So it'll be super easy for them to meet their obligations because the dollar won't be worth anything. So if your policy's worth $10 million, but a loaf of bread costs $5 million, here's your $10 million. Whoop-de-doo. So yeah, it absolutely can be wiped out. Hyperinflation will wipe out
any fiat money, assets or instruments. Absolutely, 100%.
But if you have enough gold and silver in your portfolio to offset those losses, that's the goal. That's the whole point of owning gold and silver. You're not buying it for investment. You're buying it as an insurance policy so that you can have your assets in these other things,
right,
and cover yourself.
Now, the fact of the matter is that gold and silver are severely undervalued. So that creates opportunity as we're going through this reset. And as the gold and silver, the nominal value starts to go toward its fundamental value, which is much higher than where it's trading now.
Well, let's say it was at its fundamental value now, let's say 12,500 an ounce, right? Even if it wasn't undervalued like it is, right? Fundamental value 12,500, right now it's around 1,900, undervalued. But even if it was at 12,500 in a hyperinflationary reset scenario,
yes,
you're talking about gold that could be 50,000, 100,000, 200,000,
5 trillion. Right.
Just like in Germany, hyperinflation was 87 trillion Deutschmarks for 1 ounce of gold. It started at 170 Deutschmarks. And in 4 years, it was 87 trillion for 1 Deutschmark. So even if it wasn't undervalued, gold retains its value during that period of time, goes up dramatically while fiat money evaporates and real assets plummet in value. And so the opportunity is to take that $87 trillion and then buy undervalued assets so that when you come out of the reset, you're on the better side of it.
You're learning so well.
That's right. I listen, digest, take it in.
Love it.
Yes. So, here we go. Okay. Let's find out what we got next. Jesse L. asks, it's clear to me how inflation harms the population, but how exactly does inflation enrich the central bankers and their friends?
That is a great question, Jesse. Well, if you think of it like a wheel and the hub of a wheel, right? So you've got the central banks in the center. When they create new money, it has the most value that it will ever have. So who's right around the hub of that wheel? That's corporations. So banks, which are actually corporations, and other corporations. And then after that, it's the government. And by the time it trickles down to you, it's lost a lot of its purchasing power value. Though by the time you get it, at that moment, it does have the most purchasing power that it ever will. But in the meantime, these corporations that get it first when it has the most purchasing power, I mean, you can see how it benefits the 1% in that K-shaped recovery that we haven't really finished with yet. But they get to buy those assets with dollars that are then devaluing. You don't have that same luxury because you don't have access to that debt. at the same levels or at the same timing as the corporations. Additionally, when you talk about their friends, corporations wanted to pay you less and less and less. But they knew that if you were used to getting $10, you weren't going to accept 5. If, however, that $10 spent like 5, take a look at how the productivity, how the division between income and asset valuation has really risen for the top 1%, but look at the 90%. That has gone down. So they just get to buy these assets with cheap money, and you don't even really have that option. And they get to pay you less, even though, because it creates nominal confusion, it looks like they're paying you more. Back in 1970, the average
income.
No, not
Family.
the average of the wage to the CEO to the average worker was 20 to 1. Now, the last time I checked, it was averaging 360 to 1. But in a lot of cases, like say Bank of America or Chase, it's like 1,000 or 3,000 to 1. Well, where did they get all of that money to make that expansion? Inflation helped them do that. Because the corporations are earning more, but in reality, they're paying the workers less. And once they started paying the workers more, well, the Fed comes out and says, oh, no, that causes inflation.
Yeah.
Right? I mean, that's a whole nother discussion, but that's how it enriches. And for governments, it enables them that inflation tax is a tax that they get to issue without going through legislation. And you need to be clear. Inflation is not a monetary phenomenon. It is a fiat money phenomenon. So, is that clear?
Yeah. Another way that occurs too is like because they have access, the people who get access to the funds first can buy assets, and they can buy more assets. They have access to it. They can buy the assets, and inflation in a somewhat healthy economy, right? If you're buying up property, if your corporation's buying up property or stocks, let's say, and those assets are rising in value because you had access to that money first at cheap rates or whatnot, then the inflation is going to raise the value of all those assets that corporations and banks own, make them more valuable, right? So that's another way that's inflation is, because they're owning the assets, the inflation is making them wealthier.
Right. And if you even look at what happened in 2020, which they couldn't go back to what they did in 2008 and just bail out one sector, but they kind of did, but people didn't see it. So they stimulated the public, they stimulated the corporations for sure, and they're the ones that benefited the most.
Right, and they got the most because of the PPP programs and stuff.
Exactly.
Yeah.
But why did they inflate the population? I think it was for 2 reasons. Number one, because if they attempted to do what they did in 2008, they would have had a lot of people complaining about it. But also, we're a consumer-driven economy. So if the consumer doesn't have money to consume with, we got a problem. So they gave them that money so the consumers could continue to consume. And have we not heard up until recently that's now changing? But what we've been hearing is how strong the consumer is because of all of the savings and how they paid off their debt. Now they're regrowing that debt.
And the moratoriums on
mortgages, student loans, all of these things were about
rents.
Consumers exactly being able to consume, which supported the corporations that didn't just raise prices in line with inflation, but it was called greedflation. However, it's the rise in the wages. That's the real problem, and I hope you guys realize I'm being facetious.
All right, so Bill B asks, as the fiat money expires, will the coins we're currently using retain any value? So he's not speaking if we're saying currently using, he's not speaking of junk silver. So there's no like base.
And there's not even any
monetary
copper,
metal, yeah.
Right? And there's not even any copper in the pennies anymore. So the answer is no, they're not going to retain any value. And, really, how many people actually even accumulate the change anymore? It's more of a pain in the neck.
Yeah, well, even if you had a ton of it, it's gonna spend the same as the regular fiat money. So no.
Yeah.
No retention of value. The only thing that would retain value would be gold coins or silver coins, because those are, precious metals at their core.
And they're precious metals, and they're used across the every sector in the global economy. So, yeah.
Yeah.